Hey everyone, Couch Investor back to another video for you today. So let's talk about Fiverr. Company reported great earnings, which we're going to discuss in this video. They beat guidance and they raised full year guidance as well. Now, if you remember, in the last quarter, the main reason why the stock tanked is because they reduced guidance for the full year as well as for this quarter. Why did they do that? Just as a precaution because of hyper seasonality, especially with Fiverr's business. They knew during the summer months, the economy reopening, etc., maybe less people would be using Fiverr. What you know, they beat their own expectations and then for the full year, they raised it again. So what does this show me? One, I think management is showing that they are top class. They know how to manage tricky situations, especially right now after coming out of the pandemic, the economy is reopening, summer months, etc. So they took a precaution, lowered guidance, but they over-delivered, which is great. Second of all, it really shows me that Fiverr's business is not just a COVID play. Even after COVID, you will see at the numbers, they're still growing 50%, which is insane. Now, this company is not going to be huge tomorrow, but in the next 5 to 10 years and even more, this company has the potential to become immense. And this is why I'm a long-term shareholder of Fiverr and I'm hyper bullish on this company. Now, I don't want to waste your precious time, but before we jump into the earnings report, I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. All right, so revenue grew 42% year over year to $74.3 million. They actually expected it to come in at a midpoint of $70 million. So they beat on that. Active buyers came in at 4.1 million, grew 33% year over year. I do hope that you notice that those year-over-year comparisons are very, very difficult because last year that was a quarter of peak pandemic, nothing was open. So growing at this rate is very, very impressive. Spend per buyer grew 20% year over year. The take rate is still going up and it's a huge, huge percentage. 28.4%, that's up 140 basis points year over year. Gross margins, non-GAAP, 84.4%, great as well. GAAP net loss, negative 14.3 million. Now, adjusted EBITDA came in at $7.3 million. They expected it to come in at a midpoint of 3 million. And as for adjusted EBITDA margin, that came in at 9.8%, a 180 basis points year over year improvement. Now, as for Q4, they expect revenue to grow between 33 and 39% year over year to come at the midpoint of $76 million and adjusted EBITDA to be between $5.5 and $7 million. And for the full year, like I said at the start of this video, revenue is expected to grow at a midpoint of 55% year over year between $292.4 and $295.4 million. Yes, it is a bit lower than the guidance they gave us in Q1. And as for adjusted EBITDA, huge increase here. They expect it to come between $19.5 and $21 million. Now, the guidance back in Q1 that they gave for that was between 19.5 and 24.5. So it's nice to see that the low end hasn't changed. So far, so good, right? Those numbers don't lie. Fiverr as a business is doing incredibly well. But they have been doing some great business as well in that quarter. They have acquired some companies that will bring a lot of value to the Fiverr platform and the Fiverr flywheel. So we're going to have a look at those as well. So they say here, as we think about the next 10 years of Fiverr, we want to be more than just a marketplace, but an ecosystem that empowers freelancers and businesses to grow and thrive. The acquisition of Creative Live helps us round up the offerings in the learning and development space for freelancers on our platform. Together with Fiverr Workspace, Promoted Gigs, Seller Plus, and of course the core marketplace, you can see how we are building all the pieces to support every aspect of freelancers' lifestyle. On the demand side, the acquisition of Stoke allows us to be present and provide value to businesses even when they have existing freelancer relationships that are offline or outside of Fiverr. This is very, very important because the offline freelancing market is still much, much bigger than the one that is online. So they're not taking a market that was untapped before because, well, it's obviously offline, and it's taking them right into Fiverr's marketplace, Fiverr's flywheel. And in the future, that will bring an immense amount of value for the company, for the customers, for the users, but for the shareholders as well. And if you need further proof, you can just look at the graph right here, increasing return on investment for performance marketing investments as cohorts season over time. On the left side is the return on investments, and underneath is when the cohort started. Now, a couple of other aspects here. Remember, in the last quarter, we talked about the subscription product and how that is evolving. You could choose between 3 months or 6 months or more. So right now there are 50,000 gigs that have added the subscription options to their packaging, and Fiverr saw 20% of subscription orders are for a duration of 6 or more months. And we all know that the market loves recurrent revenue. So this is another great sign. Now, a quick visualization of how everything is evolving. So you can see revenue quarter over quarter growing up. Yes, Q2, Q3 this year took a tiny hit, but overall, the growth story is intact. And not only is Fiverr continuing to grow its business, it's doing so while reducing the costs of it. You can see here R&D, sales and marketing, general administrative, all as a percentage of revenue has gone down significantly while their revenue as a business has gone up. Right, so overall, to conclude, very happy with this quarter. I believe the stock was up close to 20% yesterday, until the market turned and everything went down. But I don't care what happens in the short term. This quarter really showed two things. One, management is great. They know exactly how to navigate tricky situations. And two, Fiverr business is here to stay in the very long term. It's also great to see that they are acquiring a couple of companies here and there for not that much, but it brings a lot of value to Fiverr's users, whether it's on the seller side or on the buyer side, especially now that they're tapping into that offline freelance market and as well going for those bigger spenders, something that Upwork has been doing for a long time. And this is obviously going to take the spend per buyer much higher. So this is all great. Also raised guidance again. So that's great to see. I'm a happy shareholder. I will be adding on any weakness that I see. Right now, very happy with my position. Long-term position, long-term hold for me. Now let me know what you think about this quarter, about Fiverr. Let me know down in the comments below, and stay tuned for the next video, which is going to be SoFi. That will be it for this video. If you liked it, consider leaving a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. As always guys, take care, stay safe, and see you all in the next video. Bye bye.